I'll make welcome the first person on the panel. He's the CEO of cNGN, Mr. Ogwedegbe Uyoyo. Please, a round of applause for him as he makes it up the stage. Thank you very much, sir, for coming. Anywhere you want to sit, please. The next person is Mr. Martin Kwame. Please make it up to the stage. I think he's the president of Fintech Association Ghana, if I'm not mistaken. Welcome, sir. Welcome, sir, to Nigeria. Somebody from the Nigerian Blockchain Association team, Nigerian Blockchain Week team, Motolani Omotui, she will be moderating this panel. Please, a round of applause for her as she makes it up the stage, please. And the next person is Mr. Cyprian Obi. Can you please make it up the stage? And the other person is no other person but Mr. Sheon. He is the CEO of Hyperbridge. Please welcome him as he comes up the stage. They are going to be talking about an amazing topic that is around stablecoins, CBDCs. If you don't know what CBDC is, it's called the Central Bank Digital Currency, reimagining currency, trade and cross-border payments in Africa. So sit back and listen to them as they talk to us. Thank you very much.
Good afternoon, everybody. Can you hear me? Okay, far better. Hi, everybody. Good afternoon. Good afternoon. All right, thank you very much. This panel is actually going to be a very interesting one because all of the questions I have here, I really wish I could get everybody's opinion, but let's get right into it, right? So let's start with like the first question, the first category of this question, which is market adoption and economic drivers. Now, we know stablecoins are now like the big boy in town. It's now getting dominant, or it's already dominant now everywhere. And so, should African regulators view this mass adoption as market failure or like of the existing financial system? So we've seen how stablecoin is, getting successful. So can we say the existing financial system is like a market failure, or as a natural, innovative response to economic pressure? This question goes to Mr. Kwame.
Hello. Okay.
Hello. Yeah.
So, good afternoon, everyone.
Good afternoon.
Yes. Once again, I would like to say thank you for having me. So, my name is Martin Kwame Awaga. So, my surname is not actually Kwame, it's Mr. Awaga. Yes. So I'm actually the president of the Ghana Fintech Association, and it's great to be here to support what the Nigerian Fintech Association is also doing, because we believe as an ecosystem and as a continent, there's the need to solidify that relationship in terms of brotherliness and coherent development across borders, irrespective of course we are all one people, and there's the need to accelerate development, and particularly in the financial space, because that's how we can enable laughter and enable trade beyond borders. So thank you once again for having me. I would say it is both. The reason why I would say it is both market failure and innovation is when certain things are not aligned properly in terms of what the market is desirous of, particularly as we have heard severally from all speakers that has come onto the stage and the other panels prior before us, is, Africa's market or financial market is heavily dependent on currency volatilities. I think we all know what that means, the fluctuations that our currencies actually see or go through. And we also have very weak forex corridors. And so some of these issues, some of these market failures that are not being able to be addressed are some of the reasons why this led to some strict innovations that we are seeing, or emerging technologies that we are seeing currently coming up. So I would say it is both, and these are some of the reasons why I would come up with those conclusions.
All right, thank you very much for that answer. So I'll be moving on to Siren. Right, yeah, Cyprian, right, sorry. I'm moving on to Cyprian, and I want you to introduce yourself to everyone before you answer the question. So currently now, we basically have foreign-dominated stablecoin like USDT and USDC, dominating the market at the moment. So what's the realistic way that we can have like Africa currency stablecoin like cNGN, dominate the market and then gain trust, gain stability for both domestic and regional cross-border activities?
Hello, good afternoon, everyone.
Yeah, good
I
afternoon.
am Cyprian, and I'm the founder and CEO of Zonex. So Zonex is an on-ramp and off-ramp platform for traders to trade their different cryptocurrencies to Naira. So going to the question of our local stable coins going like mainstream in the market, we have to focus on two major things. That two major things has to be gaining trust in the market. So by gaining trust, we have to, the local pegged stablecoin has to be transparent with audits, has to make customer understand that their asset is really backed with real world values. They have to make users really understand that each of one of those pegged stablecoin, let's take example, the major pegged stablecoin to Naira that we have in Nigeria is cNGN. So we have to make sure that one cNGN is equal to 1 Naira. So these are the things that we have to build, not just making it the pride of a nation or something, not because we have USDT, which is pegged to USD, then we just have to build a pegged Naira stablecoin pegged to Naira because we just want to have it. So, and another thing is utility. Utility in the sense that each users have to spend those coins everywhere and anywhere they want to use those coins. They have to be able to use them. So that is another thing they will have to consider. So I'm a builder. So at Zonex, we are definitely looking to adopt these stable coins. We are definitely looking to integrate them into our product, integrate cNGN, integrate USDT, so that users can be able to swap between each of them depending on their needs. Thank you.
All right. Thank you very much. That was like a very interesting question in terms of like trust. I know that in the blockchain space, the first thing you have to do is to learn to build trust, and then with that trust, people can trust that you'll be able to give them this level of stability for whatever you're trying to do. So thank you very much, Cyprian, for that question. I'm going to be coming out to Sheon. I want you to introduce yourself. And now we know that stablecoin as the big boy in town has drastically made remittances costs go down in terms of like the fees you pay. So my question now is, how can the average people benefit from this rather than just stablecoin being operating in the regulatory gray area? How can people benefit from these fees? How can people benefit from these savings?
Hello everyone, my name is Sheon Lanlege and I'm the co-founder of Bulletop Labs. Bulletop Labs is a blockchain research and development lab, and our major product right now is called Hyperbridge, which is a decentralized cross-chain bridge. It allows you to move assets seamlessly between different networks. You can move stablecoins like USDT, USDC. Of course, we're hoping to add support for cNGN in the future as well. And the reality is that the assets that most people bridge are actually stablecoins, right? Stablecoins have dominated remittances, like you've brought up, but also trade. And one of the reasons why this is so is that, let's look at the SWIFT or MoneyGram and the fees that they charge, right? Like sending money via MoneyGram, you incur fees of around 5 to 15% for sending money. That's like from a foreign account to a local Nigerian account. And let's not forget that this takes days. This can take from 5 working days to 2 weeks. So I think it's pretty. I think it's pretty impressive what stablecoins and blockchain technology have done for financial, infrastructure for basically everyone, right? Like you don't have to, have a US bank account so you can have like instant settlement of your transactions. You just open a wallet and then immediately you have access to like the global finance. So not only is it saving money, I think it's also saving time as well. And I think this is really what is driving adoption of stablecoin infrastructure and stablecoin rails, is that the traditional banking system is so inefficient that it takes so much time, and time is money, really. So you can't even price how much opportunities are wasted during the period of you're waiting for your transactions to settle. And so this is, in my opinion, really the key feature for stablecoin settlements and stablecoin for remittances and trade, because they both go together.
All right, thank you very much, Seun Lanlege, for that interesting question. So I'm going to go back to Mr. Martins Kwame. Yes, right. So you are the president for Nigerian Fintech of Ghana, right? Yes, Ghana Fintech, right? So I'm going to ask you a question based on trade and SME utility, right? So how can African importers and exporters currently leverage stablecoin to, bypass the current banking issues, reduce FX issues? How can importers and exporters basically leverage stablecoins?
So basically, as my colleague rightfully mentioned, there's a lot of delayed transactions when we are trading beyond borders. There was a situation where a colleague said, it's easier and faster to even send, shoes. When you buy shoes in Ghana, a pair of shoes, it's easier and faster to send that across to Lagos, from Accra to Lagos, than it is to even send money or pay for goods and services from Accra to Lagos. That should tell you that, with that delay in processing payments, it's validates what we are talking about when it comes to serving as a hindrance to trade and SME activities. Okay, that's actually one. The other one is the high level of transactionary cost. When you are doing cross-border transactions right now from the brick and mortar commercial banks, it's highly expensive. Okay, and we cannot validate this enough. We have said it over and over again. And what stablecoins are doing, or what crypto does, is real-time or near real-time transactions are being enhanced with these platforms, or with these innovations, or with these. So like I said from the beginning, it is as a result of these market failures, that's how come we are seeing this kind of innovative product coming on board to make our lives easier. Of course, who doesn't want an easier way of doing things, faster and cheaper? That convenience is what we are talking about. And that convenience is what the stable coins or the crypto on this blockchain infrastructure that we are seeing coming up, or we have seen being leveraged on to develop this system of transactions across borders easier and faster. And this is what is bridging the gap for trade and SME actors.
All right, so I have like a follow-up question to that, right? So for exporters who still don't believe in that, stablecoin or digital money is real, what do you have to say to them?
Well, for now, I would say it is their loss. Because innovation, one thing we need to understand that through human evolution, we have always evolved. At every stage of human evolution, there has been an evolution. And innovation has always been the bedrock for that revolution. You talk about how money started, how funds actually started. We're talking about the barter system, then coins, then paper money. And today we are seeing stablecoins and crypto, it is not by magic. It is as a result of human beings' ingenuity to try to make themselves better, to try to find ways and means to make life easier for themselves. So once we understand that narrative, once we understand that, it's either they catch up. I mean, for these exporters you're talking about, it's either they learn to leverage on these innovations. Of course, we don't need to speak it. We don't need to sell it to them. There would come a time where they would see the need to leverage on these stable coins or these solutions that have been built on the blockchain to allow for their trade. Because, for instance, practically, when mobile money came to Ghana, when we started mobile money in Ghana in 2009, I, for one, personally, was like, how can I use my, card or my mobile phone number to transact financially? I was one of those people who stepped back and was like, no, this is not something that I believed in. But over time, the convenience and all these things and how they make your work easier, because finance is the bedrock of every business. So if there are options that are made available for you to make your business faster, and you decide not to leverage it, it's your loss. So my word and advice to them is they will catch up. You don't need to force them. There will definitely come a time where they would decide to jump on this train. Thank you.
All right, that's like a very interesting answer. Actually, the fact where you said you didn't think that sending, funds from your number was possible. Even me as well, if someone had told me through WhatsApp you could, send USDT or send money from just your WhatsApp, I'd have said it's impossible. But now it's very, very possible. We have various innovations that are doing that. So I'm moving on to you. I know I didn't ask you a lot of questions, and that's because I have special questions for you, right? So let's talk about cNGN, right? Scaling the extent. Not working. So let's talk about cNGN, scaling and extend listing. For cNGN, or like African peg stablecoin, what's the most significant infrastructure and commercial hurdles you've experienced to achieving liquidity, especially even gaining listing to exchanges or platforms that favor foreign stablecoin? So what is the most significant or commercial hurdle you have for cNGN?
Thank you. Hi everyone, I'm Uyoyo, and I just want to kind of start before I approach that question to say we have some scar tissue in trying to do this in a few African markets. I'd say fundamentally, right? I don't know how deep we want to go, how much time we have to kind of approach these questions, but there, on one level, you rarely have market makers, right? So market makers are people that are in currency markets and then ensuring that there's always liquidity in that currency market to buy and sell, right? So a market maker would typically buy both sides of the transaction. So for example, think of like a Bitcoin USDT market, right? You have market makers whose job is to fulfill every order on that market, for example. So if you come and you say, I want to sell 0.1 Bitcoin, right, for USD, their job is to make sure that they buy that Bitcoin from you and sell USD. So what that means in practice is, for one of the biggest problems we've seen is for African countries, they are not very advanced like market makers that are willing to take African currency positions, right? So, and there are a number of issues to solve. There are a number of issues to solve there, right, to make sure that happens. But that's one problem, right? Of course, regulation is another problem, right? We've made progress, but we're just not, we're not there yet. Like, we're not where we need to be. But I'm reliably informed that the regulators in Nigeria are doing a lot of work Even in Kenya, the Kenyan government sent people from the CMA, people from the CBK, like a number of their delegates were in our office in Abuja to really kind of learn about what we've done with stablecoins so far. So I'm aware that in many African countries, a lot of progress is being made. So on the regulatory side, I strongly perceive that would have a lot of regulatory clarity over the next 16 to 18 months. Also, just there's pressure from US now with the Genius Act. China is very keen on that. So I think regulation, we can expect to pass a lot of our regulatory hurdles over the next 18 months. So I won't consider that like a serious long-term issue. More structurally, I'd say the biggest problem is probably having proper like market makers and markets to trade those currencies. Yeah.
That's a very interesting answer for the order you're facing. I think market makers are very important in the market because they are the one that ensures the liquidity goes in and out, right? So I have another question for you. So we know USDT, USDC, they've been in the game for a long time. So how does cNGN plan to, build trust in terms of reserve, security, compliance? So how does cNGN plan to override or be able to compete with USDT and USDT?
No, thank you. Some things take time, right? But what we are doing our own part, I can tell you that there's nothing that Circle is doing today. Circle is the issue of USDC, right? There's nothing Circle is doing today that we're not doing, right? From attestation to auditing reports to regulation, there's nothing they're doing that we're not doing, right? There's something by the Bank of International Settlements called Project PRIX Trial, and that's something that we've implemented for more than 1 year now, right? So you're just now having certain stablecoin issuers start to implement those, right? On our team, we have people that are part of forming the travel rule guidance, right? Something called the IVMS 101 standard through the Digital Euro Association. So we're very much involved in compliance forensics globally, right? So there's nothing we're not doing. We have attestation auditors, we have financial auditors, we have assets managers, we have custodians, and all of these people play independent roles to ensure that for every cNGN in circulation, there is at least 1 naira, right, back in that cNGN. As a matter of fact, we always have more naira than cNGN. Like our backing is always more than the cNGN in circulation, right? So yeah, I think some things will take time, naturally, as people kind of learn more about what we're doing, kind of start to interact with it, play with it, right? But just a broader answer I would give is everything is a vehicle, right? People use USDC, for example, or USDT, not merely because it's backed by the US dollar, right? Or because Nigeria is such a Naira is a volatile currency. If think about that argument, if that was the case, why doesn't anybody use Euro stablecoins? Does anybody here have a European stablecoin? No? Does anybody here have like a pound stablecoin? Does anybody have USDE or any stablecoin other than USDT or USDC? Yeah. So I think that should say something. It's not really about Naira losing value or Naira devaluation. As a matter of fact, Naira has done quite well this year. Of course, there are structural problems on the long run that affects the Naira. But USD has lost like 11% against, like the dollar index has lost 11% this year. But has anybody stopped using USDT, right, for their transactions? Most people have not. Now, the simple answer is USDT, USDC, cNGN, PalmPay, OPay, money, like call anything, money points, think of any payment thing. All these things are vehicles to go somewhere, right? So as long as our president here has just said, as long as your vehicle is cheaper, faster, more efficient, and more liquid, people are going to use that vehicle. It doesn't matter what the name of the vehicle is, what the color of the vehicle is, right? Yeah, and that's how I think we grow adoption. It's just by being, practically speaking, beating the other stablecoins and beating the other players in being more efficient, in being cheaper, in being more liquid, right, and being faster. Obviously, we're still a long way from, really competing with a lot of these guys, but we are already seeing that. We're seeing some very interesting names, some very interesting users start to integrate cNGN and use cNGN for their day-to-day, for their day-to-day transactions. And long-term for retail, for like everybody here, you may already be using cNGN and you don't know. Do you know what I mean? Because businesses are using this back end to power their systems. So yeah, over time, I think that trust will grow. But for us, I can guarantee, there's nothing that any stablecoin issuer, certainly Circle or Tether, there's nothing that they're doing that we're not doing. And just given the markets we're in, we're doing more than what they are doing, right? Just to prove ourselves.
Okay, so I have like a follow-up question. So in terms of local adoption, how has it been? How has it been for cNGN?
Very, very interesting. Very, very interesting. Of course, just given the markets we're in, you're better off being quiet about it, right? But there's a lot of uptake for cNGN. There are a lot of very, very interesting use cases.
Can I ask like a follow-up question? So in terms of like local businesses, I know that I'm pretty much very sure that most Nigerians here, or almost everyone in this room, would rather hold USDT or like rather than cNGN. So what's the insight? Tell us, okay, why should we hold cNGN rather than holding USDT or USDC?
So I mean, do you have any USDT? Okay, if you're being very honest, as you're sitting now, do you have more Naira or more USDT? Just honest, like just honest.
More USDT.
Okay, but that's you. Like I can almost guarantee that 90% of, sorry, if you have more USDT than Naira, can you just do like this? I don't know. If you have more Naira than USDT.
If you have more Naira than USDT.
More Naira than USDT. Like, and this is Fintech, this is like blockchain and AI, right?
Yeah.
So my simple point is there are more people saving in PiggyVest, for example, than holding USDT. I think that's just straightforward. And I don't think that will change at least anytime soon, unless of course Naira just starts to like hyperinflate and just goes to the bin. But I don't see that happening. We would continue to have more people hold and use Naira than USDT. For example, if I'm paid in Naira, right? Let's say my salary is 1 million Naira, and I take that 1 million Naira. Let's say you paid me 25th of, I don't know, what month are we in? 25th of August, right? And I took my 1 million and I saved it in USDT. Since then, USDT has lost like, I don't know, because at that time it was like maybe 1,550, right? USDT is now like 1,570, 1,580, 1,590. So let's assume USDT has lost 5%. So my 1 million Naira, if I put it in USDT, is now worth, let's say, I don't know, 955K or something like that, right? Now, of course, Naira loses a lot of money to inflation, but you have to see that there's a mental barrier there where if I take my 1 million to the market and it can only buy me fewer things, that is a less painful experience than if I put my money in USDT and I can get fewer Naira at the end of the day. I don't know if this makes sense. Psychologically, if I go to the market or I want to buy petrol or I want to buy yam or gas, and I can buy fewer yams than I could buy last month, it's like, this country, inflation, that's an issue. But if I gave you 1 million for your savings product, and you now give me 950K after saving for 2 months, you're a thief. Do you know what I mean? So that's the psychological difference. And I think most people will continue to save in Naira.
Yeah. Thank you very much. We are almost getting to the end of this panel section. So if you have like any question, just write it in like a sheet of paper and you can pass it to me. I'm going to ask. But let's go to Seun Lanlege for one other question. So while we have stable coins on public blockchain like Ethereum, Solana, they offer decentralization and transparency, sometimes they still face scalability issues and cost issues. A permissioned enterprise-focused blockchain solution a more viable platform for, African stablecoin payments network?
Absolutely not. I think we have to really understand why blockchains exist, why they are a $4 trillion market today.
Yeah.
And I'm talking about public blockchains. And also why there's zero successful private enterprise-focused blockchains. It's that in the previous system, your money was not your own.
Yeah.
your money belongs to the bank. The minute you deposit your money in the bank, it is now the bank's money. Maybe the numbers on your screen in your mobile app, in your banking app, that's basically an IOU. And it's an IOU that, well, if the worst comes to the worst, the bank is only required to give you 25% because of the insurance, the national NDIC insurance of the bank, right? So the reason blockchains exist is because a lot of people, especially a lot of wealthy people, are not satisfied with that kind of infrastructure. The bank makes, roughly anywhere from 4 to 10% on your money from bonds, from interests on loans to, of course, major corporations, and they give you very little in return, and then you take on all the risk, right? Whereas on a public blockchain, your money is your own. And sure, these assets may sit idle, but at least there's no event that can take away that money from you. That's why Bitcoin right now is sitting at 2 trillion. We just crossed an all-time high, $125K per Bitcoin. And Bitcoin doesn't even do anything. You can't stake it, it really doesn't do anything. It's a glorified NFT. But people value the fact that it lives on a decentralized network where no nation state, no single individual has proven to have power over that network. And that is the most important thing about blockchains, is that decentralization. It's that permissionlessness that keeps people in control of their assets. And so, of course, we're seeing now a lot of, enterprise blockchains or corporate blockchains. I think we saw Stripe is launching a new L1. There's a new Plasma blockchain as well. I don't think that these blockchains are going to see any significant user or developer adoption because they kind of are the antithesis of blockchains. People wanted to use blockchains because they didn't want to give up control. So stablecoins are also this middle ground between giving up control a little bit. Like if banks come to start issuing stablecoins, then they necessarily have to give up control of the money supply, right, to people so that people can own, of course, their own assets. And it's this middle ground between that and still being able to perhaps freeze accounts on-chain if they detect any kind of fraud, what have you. And so, yeah, that's just my own personal opinion. We can see this in existing supplies of stablecoins as well. Theta at over $170 billion, USDC nearing almost $100 billion as well. These assets, if you can think of these issuers as sort of banks, and these are their assets under management, places them in the top 50 banks, right? So banks, they hold assets, they have assets under management, right? The assets that users have deposited to them. So stablecoin issuers are now competing with the top 50 banks. And I think it's inevitable that they will become the top banks, in quotes, in the future.
Okay, Sean, sorry, I have a follow-up question with that. Do you think it's really necessary for, these banks or these more people to launch their own stablecoin blockchain? Why not just, maybe everybody should gather and just choose USDT or USDC or cNGN rather than just building their own stablecoin from scratch?
I think it's a question of distribution, unfortunately. Banks have basically all of the distribution, and if they do decide to launch their own stablecoin, that product will meet users, where they are, on their mobile app. I opened my Stanbic mobile app recently. I saw these e-wallets, the e-Naira in there, and that's distribution. Even though it was poorly implemented, but that's distribution. So you can imagine maybe Stanbic releases their own Stanbic Naira, and it's on BSC, it's on Polygon, and they say, hey, you can just convert your balance directly to this Stanbic Naira on any EVM network of your choice. How many users do you think they'll get on day one? So there's definitely going to be competition for stablecoin issuance.
Yeah. All right. Thank you very much. Okay. My time is up. Okay. All right. So one last question for Cyprian, right? So you currently own a cryptocurrency exchange, right? So my question is, what on-chain and off-chain tools and policies are essential for African regulators and exchanges to effectively monitor transactions and prevent stablecoins from becoming a preferred channel for money laundering?
Okay, as a builder, I love to be very practical. So if, for example, now let me use Zonex, which I'm the CEO of. On Zonex, every transaction on Zonex is carefully monitored, and we use good mediators like Chainalysis to monitor every transaction to see that there is no fraud that is going through the system, and make sure that every transaction is secured for every user. So that is like the major thing that exchange founders like us do. We have to make sure that every money moving through the system is carefully audited, carefully monitored, carefully seen that every transaction is genuine. That is why for every user that come into Zonex, we make sure that they are KYC'd. So that is like the major step we do. We make sure that we know our customers, they verify and get into the system with their profile. So every transaction that is done is being linked to every user. So because we offer an off-ramp service, that means you can send the major use cases of stablecoin, which is remittance. You can send money from anywhere in the world to Zonex users, and they can off-ramp to their system. So those users are KYC'd, so that when they off-ramp to their e-wallet or to their bank account, we make sure that we link a user to it. Thank you.
All right, thank you very much, everybody. Thank you. We have come to like the end of this panel section. I hope you guys learned one or two things from this panel section, because it was very interesting for me. So thank you very much, everyone.